Good morning. How are we doing today? It is your boy Trey coming back again for another freaking video, and we're gonna go over the freaking AMC exit strategy. This is an important video, and I said that I would make this once I thought we were close to the squeeze, and I really do think we are close. There's way too many freaking things lining up right now for me to overlook, so it is time for me to talk about this freaking topic, and you guys should be freaking excited because this is some good stuff. So we're gonna go over the AMC exit strategy that I personally have. Obviously, this is not financial advice. I'm not a financial advisor nor experts. Take what I say with a grain of salt. This is just what I plan on doing. So let's just dig right into the video. To start off with, I drew up Whitebeard. As always, I like to draw something up at least once or twice a week whenever I get on Microsoft Whiteboard. And this is a freaking character from One Piece. I don't know if you've seen One Piece. If you haven't, this dude is a legend. I absolutely love Whitebeard. And what gets me going about him is he's all about legacy. And apes, my friends, my family, my fellow gorilla gang, we are writing a legacy right now that will always stand the test of time. People will make freaking movies about the ape movement that has been happening. So this just felt like a great tribute to throw in. So this is kind of a drawing that I've got pinned up for what I think is likely going to happen with the AMC squeeze, right? So it is going to be a bumpy, volatile ride. We already know that, right? And I will tell you one thing for sure. Nobody knows exactly how high this is going to go, which is why I have this strategy. This is my exit plan for the stock. I plan on selling on the way down. And I've said that a couple different times. That doesn't necessarily mean that you have to do it. It is a riskier way to do things. But I will present you another opportunity as well if you'd like to do it that way. This is just my personal plan. You guys do what you'd like to do. So I've got drawn up here some ticks for prices, and then each individual tick here you can consider a day, right? So if you look at this, you're going to see that it bumps up from $10 to $20. It might come back down. GameStop definitely did that. It went from 10 to 20 to 10 to 15 to 20 to 40 to 20 to 40, right? And it just keeps going up and down, up and down. It's going to be volatile. It's going to be bumpy. It's the market, right? But what you see here is that it's not a sustained downtrend for more than 1, 2, or 3 days, right? Continuously going up. You can see that we are setting it overall higher, high, higher, low, continuously, right? And that is the whole point here. We need to maintain that upward movement. And as long as we continue an upward trajectory, the new high, right? The ultimate high of the squeeze is still on the table in my personal opinion, right? So what you're looking for is this. You're looking for a break of this overall higher high, higher low trend line. So if we continuously go up from 10 to 20 to 30 to 50 to 100 to 500, 1,000, 2,000, 5,000, 10,000, it keeps on climbing continuously. It's okay if it dips for 1 day, 2 days, 3 days, as long as it continues on this upward trend line. What you're looking for is this. A 3 to 5 day period of time where the stock trends down, right? It's sending lower highs, lower lows, and it's just continuously selling off. Because this is not going to squeeze and then go from $1,000 down to 10 in the same day. It's just not realistic. It's not possible. It's just psychologically, think about how that would work, right? That would mean that every single ape on freaking planet Earth sells it at the exact same time. And that's just not going to happen. You can't get millions, 3.2 million retail investors to do that, right? It's just not possible. So what you're looking for is a continuous 3 to 5 day period of time where this is trending down. And I'm looking for this exact zone to sell off, right? And it's important to kind of consider one thing here. So I already mentioned this, trending lower highs, lower lows, right? You're not going to time the top. This is super important. Now think about this. Let's just hypothetically say that the top right here is going to be, I don't know, $20,000. Like I can't tell you what the price is going to be. I don't know where it's going to cap out, but what I will say is only a couple of people are going to catch that absolute top, right? So on paper, your unrealized gains, you might see that at one point in time, if you invested $10,000, all of a sudden you've got 100 million, right? But the amount of people that are actually going to get that ultimate tip top is maybe a couple dozen or a couple hundred or maybe a couple thousand if you're really freaking lucky. So even though it looks like you've got, I don't know, 10 million, 100 million dollars on paper, it's okay to walk away knowing that you're not going to have that ultimate high top, right? Think about it if you're going to play blackjack, for instance. Blackjack, I used to play all the time, and some days you go in there, let's just say with $100, and I make 10 grand at my height, but I might walk out with 6 or 7,000 because it's impossible to know playing blackjack that that's the most money that I'm going to make on the day, right? It's all about having stop losses, stop limits, saying, all right, I'm walking away with at least this much money, etc. Right? It's not possible. Like it's super rare and difficult, and it's luck, purely luck, to guess the absolute top of a stock, which is why I want to sell on the way down for a couple different reasons, right? You're not going to hurt the squeeze that way. Other apes who may not hold as many shares are going to be able to experience and enjoy the ultimate peak, the ultimate squeeze that we know that we can get with this freaking stock, right? That's one main reason. The second reason is because the amount of risk selling on the way down is not that bad, right? So let's say that your initial investment was $1,000, $2,000, $5,000, $10,000, whatever it is, and you at your height hit $100 million in net worth. Well, if you walk away with $50 million, are you really going to be sad? Are you going to be sad that you turned $1,000, $5,000, $10,000 into $50 million? No, you're not. You're just not. It's nothing to be disappointed with in the least bit, right? So just know that selling on the way down is good for the overall apes. That's what I plan on doing, right? And it's going to help this squeeze reach its maximum potential. Now, if you don't want to do this, just know that there is risk involved with selling on the way down, right? What you can do is take a little bit of your initial investment off the top as it continues to run up. But the risk here is if you take 10% off the table here, 10% off here, 10% off here, 10% off here, right? You might run out by the time it reaches the top, right? You might not have any freaking shares left. So just know that you might be missing out on more gains if you sell it on the way up. I'm not recommending that you do or don't either of these strategies, right? I'm just telling you that the pros and cons of both of these, right? I think that you've got more upside and more potential to see the ultimate top of the squeeze if you sell on the way down instead of selling on the way up. Like I said, though, it is entirely up to you. And I think the most important thing about the AMC exit strategy is it is your decision. Don't let people call you a paper hands. Don't let people call you a shill. Don't let people call you XYZ, right? Because at the end of the day, we all have our own personal lives. You need to take care of your own financial situation and make sure that you are feeding yourself, keeping food on the table. And dude, I mean, if you need to make $1 million to be able to pay off your student loans, to buy off your house, to pay off your mortgage, right? To get your mom out of the hospital, right? Think about that stuff. The worst case scenario for me is that you in this squeeze didn't sell at a point in which it would change your life forever, and instead you walk away knowing that you could have changed your life forever, right? I just don't want that for anybody. So ultimately, the decision is up to you. I plan on selling on the way down, but you do whatever you got to do to make sure that you are getting fed, you are taking care of your family, and you've got the money to do whatever it is that you want to do in life. Because ultimately, that's what this whole AMC ape movement is about. Changing lives, generational wealth. That's all that I can ask for. So that's kind of what I want to talk about in terms of the actual exit strategy, but I wanted to take a couple of minutes here to talk about what you should do with your money afterwards. And this is honestly, I think, more important than how much money you make. And it's because of this statistic right here. 70% of lottery winners go broke. 70%. Now, why would I bring this up? Because guys, this is your best chance at a winning lottery ticket that I've ever seen. This is playing the lottery. This is going to be some people who have never seen more than $10,000 in their entire lives are going to be millionaires. Some people that have never seen more than $5,000, $1,000, $100 in their entire life are going to be millionaires, right? And if you don't know what to do with that kind of money, you're going to go looking around for that next spot that you can make that next $1 million or $5 million or $10 million, that next lucky lottery ticket. But you don't want to chase another lottery ticket. And this is my reasoning why, right? So when you're not playing with a lot of money, like $1,000 for instance, it's okay in my personal opinion to take riskier bets on that. That's why when you're younger, you're encouraged to play riskier stocks, more speculative stocks, because you've got a lot of time for things to play out, right? And if you hit it on one lucky stock and you make a bunch of money, well, you're sitting pretty good. And if you don't make money on a speculative stock, it ends up going to zero. Well, all that you risked was $1,000, and you can put another $1,000 into another riskier, speculative stock down the road. So 1% on 1K is $10, right? It's not a lot of money. 5% is 50 and 10% is 100. It's not a lot of cash, right? But if you're playing with $1 million, 1% is 10 grand. 10 grand. I mean, that's a lot of freaking cash. 5% is 50,000 and 10% is $1 million. So you could literally just put $1 million into freaking Tesla and a good blue chip stock, right? And if it goes up 10% in, I don't know, a month, 2 months, you made $1 million. You see what I'm saying? So it's a lot different to play with a small amount of money and play safer investments. In fact, I personally, that's why I take riskier, more speculative stock picks, or at least I did before AMC, because I'm not playing with that much money in comparison to some who are working with millions, right? When you've got millions of dollars, it's okay to let off the gas pedal. You don't need to be so risky because you have a lot more to lose with $1 million than you do with 1,000. And you have a lot more to gain with $1 million than you do with 1,000, right? You'd have to put $1,000 into Dogecoin and freaking ride that thing from December to now in order to make as much as this guy playing $1 million would make in Tesla in a month. You see what I'm saying? Like it's incredibly difficult to turn $1,000 $100,000 into a substantial amount of money with really aggressive investing strategies. But it's very easy to make money with $1 million with very minimal investing strategies, right? So my biggest piece of advice for all the newfound millionaires out there, all the people who run into a lump sum of money, is don't chase another lottery, right? You don't want to gamble. You don't want to play the lottery. You want to invest. When you've got this much money, it does not take a lot of work to make more money. Let your money work for itself, right? You just have to secure that bag. You have to protect your capital, your liquidity, because if you lost this, that's devastating. $1 million loss is substantial. I mean, that really would kick you freaking straight in the nards. So here's some examples that I have, and I'm going to tell you my plan once I get my attendees printed from AMC. ETFs are great, right? So if you don't want to manage your portfolio actively, you can put your money into, I like ARK because I like innovation, I like technology, I like green energy, I like electric vehicles. I just like an idea of an improved, better future for America, right? So I like ARK ETFs, but there's lots of them out there. Just do some research. Dividends are awesome, especially when you're working with a lot of capital, right? So AT&T, for example, pays out a pretty decent dividend. I think it's like 5 or 6%. Don't quote me on that. I don't know off the top of my head, but 5% or 6%, even if it's just annually on $1 million, like I said, 5% is $50,000. I mean, that's enough to freaking, you can live off that. You could just put your $1 million into an AT&T and live off the dividends for the rest of your life. You could retire on that. I mean, ideally. So dividend stocks are great when you have a lot of capital as well. Not as nice when you only have $1,000, right? Because like I said, 5% annually on $1,000 is $50. So when you have more money, you don't have to be as aggressive. Blue chip stocks are also a great example, right? So you can play Tesla, you can play Apple, Microsoft, JP Morgan, any banks. Well, I don't personally like banks, but you do you know. Blue chip stocks are great too, because you're going to average yourself 5, 10, 15% a year on a blue chip stock. And that's a lot of money when you're playing with $1 million, right? So there's just some examples of some less aggressive strategies and ways that you can invest your money. This is my personal plan because I do like playing speculation, but I don't want to risk the farm when I have more money than I have right now, right? So I'm even using $10 million as an example because I currently own 3,500 shares, soon to be about 7,000 once I get paid here. I think on the 15th is when I'm supposed to get paid. So either on Monday or Tuesday next week is when you guys get to watch me double down on my investment. But I'm going to have 85% of that in long-term stocks, which is about $8.5 million. And I shouldn't say no possible way I lose that money because the market is unknown, right? There's a lot of things that we can't predict, but that is pretty much secured capital, right? There's not a very high chance of me losing that $8.5 million because it's in blue chip stocks, right? It's in your freaking Tesla, your Apple, your Microsoft, all the stocks that you know have proven success and that will likely continue to grow, albeit slow, right? But that will continue to grow down the road. 10% of my capital, or about $1 million, is going to go towards swing trades. So swing trades are a little bit riskier, right? They're speculative. And you can see that I kind of have this in order of risk level, right? So the lower down on this list and the less money that I'm playing with is the higher risk, right? So I'm going to risk about 10% on swings because it is a little more risky than long-term investments. This is going to be stuff like I don't want to say Microvision because I view that as a long-term stock, but stuff like maybe Zomedica or IDEX or CTRM, stocks that have momentum, and you can ride that momentum for a month, 2 months, a week, 6 months, whatever it ends up being, but they're still risky, right? And if you lose that $1 million, it will hurt, right? But that's why we're not putting $8.5 million into it. We're securing the majority of our gains, right? Next is going to be day trades. So 4% is going to be allocated to day trades for me. With $10 million, I'm not going to risk more than $400,000 at any given time on a day trade. And that's because day trades are extremely risky. They're volatile. They swing up and down points and points and points within minutes, sometimes seconds, right? So I'm not going to risk more than $400,000. And I view options as the most risky amongst all of these different investments. And that is why I'm only going to invest $100,000 or 1% of my portfolio into options. And I think this is really, really important because if you're wrong on options, you can lose all of that premium. And then you're never going to be losing more than 1% of your actual net worth if you are wrong on your options picks. However, if you're right on your options picks, 1% of your portfolio can increase the value of your portfolio by like 10%, which is $1 million, right? If you have a solid freaking options play, let's just say I put $100,000 into Microvision when I was at $10. I got those $12 strikes. I could have turned that 100K into freaking $5 million very, 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 very easily. I know some people that are up like $1,000 1,000 or 1,200% on those microvision calls, right? So you don't have to risk a lot of money, but you can make a lot of money with options. So that's kind of my personal plan, what I'm going to do with my fresh tendies when this freaking lemon is squeezy squoze. And you guys do what you want to do. But I wanted to give you an example of what I think is a smart and intelligent way to manage your money, because this is the absolute God honest truth. I do not want anybody out there, not a single one of my viewers, not a single one of the apes who are part of the Gorilla Gang, to make this money and lose it. Please, please, please do not do that, right? There is absolutely way more risk, way more money to lose on the table after this is done. So don't go chase another lottery ticket. Please make those small gains, right? You get 8-10% gains in your portfolio and you double it. 12 of those, you triple it. You don't need to chase those home runs anymore, right? You can just stack these small 10% gains. I mean, think about this. 8-10% gains on what is this? Oh, that's supposed to be 100,000, but you get my point. I'm terrible at math. Okay, so this is 100,000, not a million. But the point still stands, right? You get 8-10% gains on $1 million, and you have $2 million. You get 12 of those, now you have $3 million, right? It does not take much. So that's kind of what I've got for this video today. Hopefully you guys enjoyed it. Blah, blah, blah. You know the whole spiel. Drop a like, consider subscribing, and I'll catch you guys all in the next one. So peace and love and positivity. My friends, my family, my fellow Gorilla Gang. Catch you in the next video, and peace.